Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 7th. Hope you guys are having a wonderful day so far today. Today we get the day two of jobs numbers. Tomorrow will be the big one from the Bureau of Labor Statistics, or BLS, which will provide us the unemployment rate as well as non-farm payrolls. But today we get the jobless claims that we get every Thursday. Last week we had 787,000 people applying for unemployment benefits for the first time. However, that did get revised a little bit higher by 3,000 to 790,000. Forecast is calling for 800,000 for this week's report, and it came in basically the same as last week's essential, but it declined technically by 3,000 due to the revision. We also got services industry here. So this is ISM non-manufacturing PMI. So this kind of gives us a gauge as to how the service industry is doing. Anything above 50 is considered expansion or optimism. And we had 55.9 back in November. Forecast come for a slight dip to 54.6 for December. However, it went upwards to 57.2. So this will have a good billing on the markets over here. And another thing to kind of note, which I don't usually cover, is the continued claims. As you can see here, we're seeing this decline a little bit. So we had 5.2 million people on the unemployment rate, and now we're down to down to just over 5 million. So we're seeing this taper off a little bit. That people are coming up, slowly coming off the continuing unemployment rate, which is obviously a good news for the economy. Let's jump ahead here to the headline news. Stocks are up. They're actually treading to new milestones right now due to, not the service industry, the ISM services, and also the Congress confirmed the Biden victory yesterday. They went through. We had some hiccups, of course, through there due to the protest, but however, they eventually got it through where they confirmed his victory. So of course, the markets are looking at how a one-party system is going to affect the economy, and that's where you're going to start seeing some activities. Mortgage-backed securities, you're going to start seeing that now, as you'll see here just ahead. Mortgage-backed securities are worsening again. We're down 11 basis points, so we broke below the 50-day moving average, are testing the 100-day moving average. So in today's rate sheet, you're going to see a little bit worse pricing in terms of mortgage rates. So rates will rise slightly upwards. And why is this? Well, with the one-party system here, basically they're going to be on the fast track of spending a lot, and when they do spending, that means that they're going to be incurring more debt. And what is mortgage-backed securities and yields or treasuries are debt, and when you have more supply out there, it's only going to make yields rise even further upwards and create more debt, and then of course you're going to create high inflation. So high inflation is the enemy of bonds because it erodes the value of that. Bonds are typically 30 years, and it's going to erode the value of that over that time frame. So that's why you'll see those yields rise to try to make up any compensating factors of what inflation might be. So basically, we're going to see mortgage rates start rising as a result of the election results. And the good news, I guess, is you're going to get your maybe stimulus checks. Let's take a look here at yields. Yields are breaking above its next level of technical support. We're just under 1.08 right now at 1.079. So that's going to continue to rise. Again, yesterday was the first time we broke above the 1% mark since March when the whole lockdowns began. And now you're going to probably start seeing this continue to rise as a result, which will put more pressure on mortgage-backed securities and see rates continue to rise as a result. All right, folks, that's pretty much the gist of it. This is where the trends are kind of seeing, and I hope you guys have a great rest of your day. If you guys have any questions regards to mortgages or any real estate, a little background about myself. I am a loan officer, and I do work with a national lender. I can certainly answer any questions you guys have. Please feel free to reach out. The best way to reach out really is just direct message me. I'll try to set up a link here at some point where we can get you some more information and better connections, but in the meantime, just go ahead and direct message me. And again, we can also help you guys with your refinances purchases. Doesn't hurt to give us a try and see what we can do for you guys in those results as well. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.